Hey guys, April 22nd, 2019, it's Monday. Finally, this long weekend is over and we're ready to trade again. Guys, this is a very exciting week because so many companies announcing earnings, so it's going to be crazy busy. So clear up your schedules. If you can take an extra time off on Thursday, Friday, it's going to be phenomenal days for trading. So 13 market moves, analysis daily. Welcome guys, we got a lot of stuff to cover. Grab a pen and paper. We've discovered some really cool things from the week one of earnings I want to share with you guys. Okay, but first, some quick observations from last day of trading, which was April 18th. Top observations were, number one, absence of volume, which a lot of times we have lighter volume than we typically see going into the weekends. Now, occasionally we'll have situations where institutions will come in and they'll actually try to liquidate their positions in expectations of a longer weekend. This time, it definitely was not the case. So a lot of people are extremely complacent. However, if we study the history over the last few years, a lot of times when you have a situation where people are just not worried going into the weekend like that, they actually do get quite a bit worried on the day when the markets resume trading again. And so those sellers that might have gone early, that maybe taken a longer weekend, maybe went on a miniature vacation with their families, and they weren't trading on Thursday. Those institutional investors decided to basically take Thursdays off. They didn't get a chance to sell. So today on April 22nd, they're back, and maybe they're starting to get concerned about some of their positions. So it is very reasonable to expect a great deal of selling today. Number two, most of the stocks are moving higher after earnings announcement, but they're having a very hard time sustaining gains, and more on that in just a second. Number three, the Chinese divergence that we discovered last week, guys, continues to play out. Number four, we're going to talk about some cool trades for today. Continuation of trade on SNA, Halliburton, Whirlpool, WHR, which was announced in earnings after hours, ISRG, which announced Thursday night. And we're going to get to participate on that trade today when the market opens. Tesla and LII, which is Lennox International. Okay, so here's some companies that we were observing last week. So there's about 35 of them here, guys. We take this sample size, we've studied, and this is what we have discovered. I'm not going to bore you with all and every single little detail, but these are the findings, okay? More than 80% of the companies on this sample size, they actually went higher after the earnings were announced. Now, only a handful of companies went lower. Now, the very cool observation is out of those companies that did go lower after the earnings announcement, they did not go higher the next day. How can we use this to our advantage? When you trade this week, if the company is announcing earnings and it does drop lower, there's a very high probability. We actually have not had an instance where the company dropped the next day after announcing earnings and where it rebounded. So those companies that do drop after earnings, is a very high probability that they will continue dropping on the next day or the following day. So you simply wait till they announce earnings, then you get into buying put positions, holding your position for the next couple of days. Now, the observations we're seeing, that predominant move clearly is stock prices are moving higher out of the majority of the companies that are announcing earnings. However, what we have also discovered is on the second day after initially moving higher on their first day after earnings announcement, the companies are making a pullback. They're selling off on the second day. And that is actually the predominant move that we have established by observing these stocks. Now, as you can see, they're from a variety of sectors, so this opinion is not leaning towards some particular sector overall. We've took a measurement of all of these, and you got all kinds of stocks. You got industrials here, you've got technology stocks, you got banking stocks, you got semiconductor stocks, you got airline. You got a good variety of stocks to derive at this conclusion. Again, let me show you a couple of charts, just kind of make this point clear. So, for example, URI, United Rentals, announces earnings. Look, it moves higher, right? And it is unable to sustain the gains. Look, it drops. It's still up, right? But it is very hesitant to move above these higher levels. And this is the behavior that we're seeing in a lot of stocks. Yes, the predominant move is they're moving higher, but they're unable to sustain these gains on day two. So the logical strategy here for swing trade or for day trade is you catch the stocks at the high levels, you buy puts, you lock in gains when they drop literally a few dollars. Some of the stocks, however, do continue dropping after initially making a pop higher. Here's another example, right? J&J, Johnson & Johnson. Look, initially moves higher, unable to sustain gains. Every time it tries to move higher, it drops. All of these are bearish reversal candles. 3 in a row tells us there is a bigger drop in Johnson & Johnson that will take place. Now, some of these stocks, right, they're just not making very huge moves to the downside, so it is a good idea to target smaller size return instead of maybe targeting our average, 3, 4, 500% here. Start locking gains when you're at about 100, 200% gains. Sell half of the position. If the stock stalls and it's reluctant to move lower, then close out the rest of the position. But some of them do move lower. Now, LVS, Las Vegas Sands, look, pop higher, unable to sustain the gain, moves lower and finishes nowhere close to the highs of the day. Another example, SNA, that was a trade that we described in detail. So the reversal was expected because this particular stock, we indicated specifically that it has a high probability of a reversal. So it shoots to the moon, right? And then the rocket comes back home right here to the 168. What we are saying, however, is, the earnings beat was there, the revenue beat was there, so the stock goes to the moon, but it is unable to sustain gains, and more in this trade in just a second. PPG, here's PPG Industries, right? Stock goes to the moon, unable to sustain gains, come back down to earth. So what you definitely don't want to be doing this earnings season is noticing that after a great earnings announcement, the stock moves higher pre-market, and you don't want to be jumping in buying calls because in majority of the cases, most of these stocks, they open in close to their highs and they're actually going to make a pullback. So buying calls when these stocks just open up in the morning is definitely not a winning strategy right now, guys. So these are some of the observations. And just to add, only one group among all the sectors that have been reporting earnings has maintained a very high probability of moving higher on the second day. And those were your UNP, CSX, your railroad companies, your transport companies, in that particular railroad sector. Those are the ones that actually have had some substantial gains, but now after moving consecutively for 2-3 days, some of them are getting exhausted too, and they're having a hard time getting further traction. But that's probably been the most bullish sector. Again, while most of the stocks are doing this, that was the only sector that had continued higher on the second or third day. So those are some cool findings, guys. Getting back to making some observations about these divergence that were described in the prior video. The divergence in the sense that finally we had an announcement about great economic improvement in the data in China. But what are we seeing? Shouldn't the Chinese stocks be moving higher? They should, but that's not what they're doing. So second day in a row, we're having very, very exciting reaction in Chinese stocks to what seems to be very exciting news coming out of China after a long sequence of bad news. So no reaction. BABA is down 61 cents. So it looks like this top information is continuing to form and a big move lower is in the cards for BABA. NTS, another Chinese stock, same thing. Another day down. Remember, we're just going over the chart how these multi-top bearish candles were forming, and ultimately they were going to lead to a couple more days lower. That's exactly what we're getting here on this chart. YY, another Chinese stock, right? Just take a look. Another top information looks like it's forming here. The stock is not down significantly, but it is down for the day. Down for the day. All three of these Chinese stocks are down for the day, while the market overall finished in the positive territory on Thursday the 18th. So the divergence in these stocks continue. Now, what do the cloud stocks potentially tell us about what will happen to Amazon this week? Yes, guys, it is a big week. Wake up. Amazon is going to report earnings on Thursday after the hours. Man, we got some crazy ton of other stocks reporting earnings. We got Facebook, we got Tesla, we got a lot of stuff going on this week, guys. But let's take a look at the cloud stocks. So we've been noticing that the top has been forming the cloud stocks. We get this big drop in some of these names, like Workday. They do bounce. They do finish much higher than what the lows for the day was. For example, in workday, it hit a low of like 184. I think it dipped into 183.80 briefly, and then it bounced, right? So 187. We're seeing an increased volume in these cloud stocks coming in, and based on the analysis we provided in the last few videos, I mean, this thing is going lower. We have a target on it, first target of 182, and then with a bigger drop to this 170, 165 area in the near term. If we take a look at some other cloud stocks, VEEV, Veeva Systems, look, continuous selling on increased volume. That has been a characteristic of the cloud sector. Another one, Splunk, right? Continuous sell-off on higher volume in the last few days. So could these cloud stocks actually take this giant down with them? That's the question of the week. Now, I know it's a very contradictory statement that I'm trying to make here. By observing the top informations in these cloud stocks, I think Amazon will actually drop after the earnings. Now, a more interesting aspect of this observation is Amazon may not have to wait to start dropping till Thursday. We may actually see a huge sell-off in Amazon over the next 72 hours. So if you're trying to take advantage of what we're noticing in the cloud sector, if there is going to be another day today lower in the cloud stocks, I think Amazon will go down with them. And so considering that there is no interest at these levels, the stock at these 1850, 1860 level, there's no significant volume going in on the buy side. Yes, the chart looks bullish. Yes, all the analysts are bullish on the stock. But some of these opportunities, they really create some phenomenal returns, because when everybody's just 100% bullish on something, they do get it wrong. And guys, this could be a very interesting trade. So again, don't build any huge positions because the VIX is still kind of low. It's on the low end, 12, 13. But getting an Amazon put today at the open could be a good idea, with an intention of not really keeping this put through the Friday, but really just calculating, okay, we could have a sell-off in Amazon going into the earnings, okay? And just be very careful, okay? You want to come in and buy these 1860, 1870 put. If Amazon does break above 1870 today, just close it out at a minimum loss. But if the sell-off continues, I mean, it could go into the earnings at maybe 1820, 1800 level. Now, this is a very tricky, very controversial trade, so be very, very careful with it. Here's the exciting part. Today, not a very busy day, but look at all these companies. So I hope you guys are doing your homework, plugging in all these charts and studying this chart. Some really cool stuff. Look, CMG, O'Reilly. We pay very close attention right here. ANTM, right? Just like Humana, it's been selling off. The strategy we've discovered last week is you want to short all these healthcare stocks on any pop in the news after earnings. So this is your next victim right here, ANTM. It pops higher after the earnings report, short it. That seems like a reasonable trade right there. Domino's, BIIB, Boeing, ALGT, FFIB. Guys, this is just an awesome list of stocks. But for the purpose of today, we're going to take a look at just these few right here. So first, actually, let's review some trades that we discussed last week, because these really represent a high probability opportunity. So the first one is SNA. We described, based off the charts on SNA, how it had a high probability of a reversal after initially moving higher. I think the reversal was rather muted, and we're seeing it could easily continue over the course of the next few weeks. Now, here's one little issue, especially if you're trading with a small account. This may not be an ideal trade because it does not trade weekly options, so you can only buy right now. If you were to pull a trigger on this trade today, May 17th expiration. So they're going to expire in roughly a month. And, these 170s, they're priced around $4 or $5. And we're targeting a level of about 155, 157. So if it does drop from 168 and you're buying these today for $4 or $5, over the course next few weeks, we expect the stock to pull back right here, 155, 157. So that's basically triple the investment type trade if everything plays out perfectly here. So in other words, after this pop, we expecting the stock to continue dropping lower. It could have easily hit some lower levels on Thursday, but it stopped around this 167. I think it set the low at 167.10 intraday, right going into the close. They kept pulling the money out of this thing. Notice how accurate the accumulation distribution is in this particular case, right? Look at this huge dip in accumulation distribution. So while the stock was moving higher, they were actually coming in and taking profits at this level. And when we typically see this, it's going to be very hard for the stock to regain its posture and moving higher above this 172 level. So for those of you that are considering this trade, ideally what you want to do, you want to buy 170 strike puts. If the stock breaks above 172.50, 173 level, close it out, take the smaller loss, and move on to the next trade. However, the probability of it jumping back up here and jumping above this 173, especially 174 level, is not likely. It probably's got a 10% probability it's going to rebound and move above that level, and 90% probability it's going to move lower. And of course, your profits on this trade would be derived depending on the magnitude of this drop and how quickly it happened. So it's an easy trade that you can get into, probably stay in it for about 3 days to a week. We could easily see it back to these 160, 157 level, and that's going to be a pretty easy trade. You don't have to worry about this position expiring on you this Friday. So I mean, it's a good trade for somebody that is not going to be able to be in front of your screen the whole week, be able to watch your positions actively. So this is one of those that you can just buy and stick with and just close it out when you're double and triple in the money on this one. Okay, ISRG, guys, we've discussed that one, and it's kind of been trading just like the rest of the healthcare stocks. And we basically said, look, based off the chart, it's going to drop after earnings, and so it did drop after earnings. The question is, how do we play it now? So the stock, this was the immediate earnings reaction on Thursday. The stock went from 530 to 493, bounced back to 497. At the time I'm recording this video this morning on April 22nd, this is what it's doing. So clearly this was the pop from it actually dropped 486, went back to almost a 500 level, and now currently at 490. So generally speaking, when you observe this type of reaction, right, even at these levels now, these $40 levels lower, there's not a whole lot of people that are interested in buying this thing. Okay, at the same time, the move lower could be greatly diminished, but there is a trade here, guys, and the trade is based off how I find it's from week 1 of earnings. The stocks that drop after earnings in this particular earnings season so far, they continue to drop lower. So what you want to do, if you want to put a trade together here, you want to buy these 500 level puts and close them out when the stock hits a level of 486 or possibly 475. The reason 486, if you guys taken the courses, you should know that a lot of times we describe situations where these pre-market or after-market levels will be revisited during the regular trading session. So what you're actually going to be looking at here is your first target level of 486. So let's say today's Monday, 9:30, the market opens, this thing opens up at 495. You buy 500 strike puts, wait for a drop to 486. Now this trade is not going to make you rich, but it's going to be an easy gain of maybe 50 to 100%, depending specifically what the options will be priced at and how good of a fill you're getting on your order. Okay, but basically target this level of 486. So if you're buying 2 contracts, let's say at the 500 puts, buy 2 contracts, target this first level, sell 1 contract when it hits 486, keep the other contract till it hits a lower level of possibly 475. Easy trade based on the observations. Okay, guys, and the next trade we're considering right here is LII, which is Lennox International. This is more like a real estate sort of company here, and in this particular environment, we are noticing that institutional investors, they're coming in, they're taking money out of these, utilities. They're taking money out of value plays. And this is one of the value play. And I think what we're observing here, look at these volume, right? You got huge volume coincides with the red candle, huge volume coincides with these 2 red candles. At these levels of 270, 275, we're seeing some people are taking their profits. We can't blame them. I mean, the stock went from 170 to 270. It's a $100 gain. I mean, I mean, that's a huge gain for institutional investors. So I think some of them are coming in and taking profits right here, which is confirmed by this sharply diminished strength in the stock right here in the RSI index. So noticing some selling activity in the stock. So if it does pop after the earnings report, I don't know, it should announce earnings pre-market today on the 22nd. So I don't know what the initial reaction will be, but if the initial reaction is higher, considering this $100 rise in the stock as a pre-existing condition of going into earnings, would be reasonable to expect on any pop, let's say to 275, 280, 285, that this stock will reverse, because there are clearly signs that people are wanting to sell and get out and lock their gains here. Now, as bullish as this chart looks, right, we have a history here. If we take a look at the weekly chart, we actually have, look at this, bearish reversal candle. Guys, for those of you still, for whatever reason, did not take charts, divergences, of course, you guys click the link below somewhere, find it, go to the website, tradingoptionslive.com, take the divergences course, because these little insights are really going to help you get some of these cool trades. And look at this, that bearish reversal candles, right? 1, 2 in a row. What happens to the stock next? It drops. Look at these 2 bearish reversal candles right here. What happens to the stock next? It tanks. What do we have here? 2 bearish reversal candles. I think this is a pretty good indication considering the history of the stock. There's probably more here where you just had 1, 2, there's another one, drop, 1, 2, drop. So you got a very, very repetitive history of once it accumulates 2 bearish reversal candles back to back, it actually makes a strong pullback. Now this pullback was rather huge, from 230 all the way down to 170. So I mean, guys, that's a $50 move within what, like 7 days, 5 days? So this is a very interesting trade. I would be very much interested in pulling the trigger on this one today. If the initial reaction is higher on low volume, if you're seeing this observation, that would be the condition to get in and buy some puts. And again, because of the low VIX, you want to buy these things in the money. So ideally like 280 puts or even 290 puts. If let's say it jumps pre-market, $10, $15 on low volume, that would be a very good time to come in, buy these 280s, 290 puts on this thing. Let's review the market moves, guys. On April 18th, we actually expected a move 3, but I think the sequence got a little bit jeopardized by the fact that we had this pre-holiday low volume type market environment. So we might have gotten a 3, but because all the sellers were gone, already celebrating, we just had a lack of sellers. And the buyers, they were there, but they were buying on very low volume. And this is observation that we keep observing pretty much every day in the markets for the last few months. And ultimately, such action leads to a pretty sharp drop. So with that said, however, the market move was bullish. We did record it as a 7. This is how it looks on the chart. As you can see, the market opens higher, sells off, it looks like a move 2, and ultimately picks itself up and finishes close to the levels where it started. Some of you may be wondering, well, how does this, if you're having a hard time calculating the difference between 2 and 7, let me show you this 2-day sequence, which is a 2-7, and you can see how does that work. So in a 2, as you can see, the market pops higher, sells off, and it continues through the end of the day. In a move 7, especially, I've talked to a few guys over the weekend, and some of them are having a hard time calculating how do you actually record the move, because what they're doing is they're not paying attention to the very fundamental thing of these market moves. Is you have to compare one move to the previous move in relation to where the market closed the previous day. So as you can see in this particular move 2, the market closes right here. Well, the next day, the market opens higher in relation where it closed the previous day. So it's higher, makes a huge pullback, and they buy the dip, and the market pulls itself back up. So that's a 7. So it's going to look like a 2, but it's going to stop the losses right here, and it's going to move higher by the end of the day. So in this case, in relation to the prior day, you have a move open higher, sell off, the buy the dip, and finishes higher for the day, in relation to the previous day. So 2-7 sequence. Now, again, this really was set up to be a nice move 3, and I think that is exactly what we actually going to get today. It didn't end up being a perfect sequence, but this day 7, in my view, would have not taken place unless it was a regular. If it was a regular day, I think we would have definitely gotten a 3 here. So maybe what we have in this situation is where a market is taking a pause, it's skipping a day before the drop comes in today. So what we're really observing here is a sequence 7, 12, 6, 2, which would be a 3 because of the holidays. It kind of impacted the markets. And markets, as you know, I try to emphasize it a lot, they don't drop on low volume. In most of the cases, for a market to drop, we need an increased volume on the sell side. Okay, so here's how this 7, 12, 6 to 7 sequence looks. And here's the key observation why we think this is going to lead to a drop. So sell-off could take place at any moment, guys, so be ready. On this 5-day sequence, I want you to pay close attention to these highlighted areas with these blue circles, right? What they're pointing to is this red action in sell-off volume. So when the markets sharply make these moves lower, they happen on much higher volume in relation to the rest volume in the day. So this right here, where you see these volume bars, this is actually intraday action. Where you see no volume bars, this is pre-market action. So what's happening, guys, is this. The market sells off on rather significant volume on these moves lower, and then they move the market higher in the aftermarket hours or pre-market on pretty much no volume. When the market opens, guess what? Or going into the close, look at this sell-off right here. Look at the volume spike. Look at this sell-off right here. Look at the volume spike. And this trend continues. This is a behavior of this market that tells us there's certain institutional investors that are taking money out of this market. And the most interesting observation, I think, out of everything that's happening right now is, yes, they're taking money out of utilities, they're taking money out of healthcare, they're taking money out of all the value plays. And the general consensus is that they're going to use that money and they're going to buy the growth stocks. Well, we're not seeing any behavior right now that they're buying the growth stocks. So the question is, can everyone just be simply wrong, thinking that the money is going out of certain sectors and going into other ones, while the money is just really going and sitting on the sidelines? Because if that's the case, that challenges the consensus of the market moving higher in the near term. We are due for a pullback, and based off what this chart and the market sequence formula is showing us, is we're due for a drop at any moment. Because look, these drops right here, they used to happen when the market was going into the last portion of the day, like between 2 and 4 o'clock, like a characteristic of a 6. Now we're noticing, like in this particular day, the market sold off like at 9:32 in the morning. It just started dropping like a rock on increased volume, right? This one happened intraday. So now we pretty much, the observation is such that we're noticing the sell-offs. They're coming in not just in the latter part of the day, they're coming in the mornings, they're coming in randomly in the middle of the day. So these sell-offs are widely present, and they are on significantly higher volume than the buy side. It appears to be as if they artificially just trying to raise the market pre-market on super low volume just to maintain it around this 2,900 level. So during the actual regular session, they can come in and take the profits. And this is not going to be very sustainable very long, guys. I mean, could we see the market sustain this level of about 2,900 for another week? Sure. Another week after that? Sure. But it's going to give in. And we're going to go, that drop, when these guys, they take as much of their position as they need out of these levels, when this drop comes, it's going to be very sharp, very quick. It's going to look on the chart just like this, okay? But it's going to be not 5, 10 points. It's not going to be 15 points. I mean, we could see S&P drop like 50 to 100 points in one day. Okay, here's the VIX review. Low numerically sideways. Clearly, VIX been under 16 for a while, which is what we consider low numerically. Now, we are observing signs of multiple days higher in the VIX. Series of higher lows observed on a 1-day, 1-minute time frame. The VIX range officially was 12 to 12.9 to 12.15 is where it ended. The VIX chart looks like this, and this is the series of the high lows that we're observing, which made me think on Thursday, well, hold on, maybe this is finally what I've been expecting is the reversal in the VIX. Maybe this is the bottom. And this morning, we're actually getting a pretty large pop. Now, the question is, will this gap be sustained? So today, pre-market, time I'm recording this about 6:30, 6:40 in the morning. The VIX is up. It's up to 1331, 1323 level. Now, the importance of this is the level where VIX has been struggling to break out of higher in the last few sessions. So if today finally going to be the day where VIX will sustain these levels, then it is going to be something of great importance. Because if it does end up finishing above 1323, 1331 area, that tells us that indeed there is a shift. There is a trend reversal here, which it's not surprising at this point because I've shown you guys a ton of charts, right, where we've seen stocks, they pop higher on earnings, but then we're seeing some profit taking action come in pretty much right away, and the second day, in majority of the stocks, it's a day lower. And this coincides with the VIX trying to make lows, and it's trying to break out of the lows and create this uptrend. So this is very interesting. I think today is a very important day. If VIX does maintain this level above 13.3, I mean, it's going to get very, very interesting this week. The next market move for today, we're thinking it's going to be market move 3, 11, or 4. Why 4? Because we still think there are some bulls out there that after initial drop in the market, they could potentially come in and try to raise this market at some point, in the second or third part of the day. But I think at this point there is a greater probability of the 3 or of 11. And if you're not familiar with the market moves, guys, entirely in detail, please make sure you take the 13 markets move formula so you can make your life much easier as a day trader or swing trader. So what we're saying is the 6 to 3 sequence was jeopardized by a low volume and lack of sellers on Thursday. So we just have 1 day delay, and that actually raises the probability of a move 3 to 80% today. So for those of you that just want to play directional bets today, going this week, SPY puts, Q puts, may not be a bad idea to initiate some positions at the market open, as long as you don't see, like a huge sell-off already. If the market is down 20 points already, probably not a good idea to be buying puts. As a general rule of thumb, you don't want to be buying puts at the lows of the day. So if you see a sharp sell-off, do not try to buy puts during those moments of a sharp sell-off. Always wait for a bounce to initiate your put positions. Okay, key takeaway, guys. Institutional money is staying on sidelines. It does not equal to a breakout higher in the market. So we continue with the strategy of shorting the bounces here. Number 2, intraday sell-offs at various times of regular trading session are leading to a bigger drop. Number 3, continued sell-off in cloud stocks tells us that Amazon is likely to drop heading into earnings or after earnings, despite the general consensus of all analysts saying that Amazon will actually move higher. And number 4, if the bank stocks are done, as we're seeing in a lot of these charts, they go higher on the first day, they drop the second day, then on third and fourth day, majority of them, they go higher, but the magnitude of the move is very much diminished at this point, and the move is happening in a lower volume, which tells us that the best, they're going to keep going sideways, not higher. And if there's no more buyers coming in at these levels, then we're going to see some profit takers come in over the course here of the next few days. So the formula is this: if the banks are going sideways, and the behavior that we're noticing to observe, which began with Netflix, if Netflix initially had a good reaction, right? They limited the loss on Netflix right after the earnings. It dropped just a little bit, moved higher the next day pre-market, dropped again, and rebounded on the last trading day just slightly. But overall, what is it doing? It's doing nothing. So if we're seeing the same type of behavior in other FANG stocks to where it looks like they're moving but they're really not doing anything, and we combine that behavior with the banking stocks, guys, that tells you the market is not moving. But if the cloud stocks are going to take a hit this week, which they're very nicely set up to do that, that means Amazon is going to take a hit as well. And if Amazon drops, guys, all the FANG stocks are going to start dropping like a rock. So we're going to monitor the temperature step by step, day by day. Good luck trading today, guys. It's going to be an awesome day. And I'll catch you guys tomorrow in the next video.